Hello my viewers, I am Dr. Geoffrey Mbova from accountingnest.com. In our today's lesson, we are going to learn about balance sheet and the balance sheet components. At the end of the session, you'll have learned on how to define balance sheet and being able to identify the balance sheet components. Thank you. What is a balance sheet? A balance sheet is a statement that represents the financial position of a business at the end of a specific period, usually a year. It discloses the assets, capital, and the liabilities of an organization. Out of this definition, you realize that balance sheet has got three main components, namely assets, capital, and the liabilities. So, in the next step, we are going to look at each component at a time. We will look at the definition, the classifications of start item, and also the examples of each case. So the first one is assets. The question then is, what is an asset? An asset is defined as properties or goods which are owned by an individual, an institution, or either an organization and can be assigned a monetary value. Now, based on the criteria of tangibility, assets can be classified into two main classes. One, tangible assets, and two, intangible assets. So let's go to the case of tangible assets. These are physical assets that are visible or can be seen or touched, and then based again on the criteria of time duration in which the asset stays or remains in the business, we can further subdivide tangible assets into non-current assets and current assets. So let's further move on and look at the non-current assets. Now, non-current assets are physical or tangible properties or goods which exist in a business for more than one financial period and normally undergoes depreciation on usage. A good example of these assets are motor vehicles, machinery, fixtures and fittings, furniture, office equipment, just to mention but a few. The next one is current assets. Now, current assets again are physical or tangible properties or goods which exist in a business for a period of 1 year or less. They do not undergo any depreciation on usage. And a good example are cash in hand, cash at bank, trade debtors, which is currently referred to as accounts receivable. We also have got inventory, which was previously referred to as stock. Then you have got unused stationery, prepayments, and accrued incomes. So the next item of assets is intangible assets. This is the next main classification of assets, and they are properties or goods which have no tangibility characteristics. They are invisible and cannot be touched. For example, you realize that items like investment in securities such as shares and bonds, those are not tangible. You cannot see them, you cannot touch them because it's an investment. We also have got intellectual properties such as trademarks, patent rights, copyrights, and a franchise. The next key component of balance sheet is what we call capital. So what is capital? Many students and even other users of accounting information don't understand what's about capital. Capital is defined as contribution meant towards the start of a business by the owner, which can be in the form of cash or non-cash resources. So we realize that capital is not necessarily hard cash, but it is any contribution, whether it is in the form of cash or non-cash form. It is an internal debt, for it originates from the owner. It is the owner who contributes this money or this cash or a non-cash resource towards the start of the business. If there are more than one owner, then we have got several owners of the business doing a contribution towards the start of the business, and so that is what we call capital. I want you to note that capital exists in form of ordinary share capital, net profit, retained earnings, share premium, general reserve, capital redemption reserve fund, net worth, net asset, or what we call the owner's claim. Now, capital is also referred to as a special liability. I would like to give you an assignment to find out what's all about special liability as far as capital is concerned, but this one will still discuss it in an advanced level. Now, the next component of balance sheet is what we call liabilities. This is in plural. Now, what is a liability? Now, a liability is any cash or non-cash property or goods borrowed by one party, known as the borrower, from another party, known as a lender, with an aim of financing the business. It is an external debt, for the business is financed by an individual or another business, or either a financing institution like a bank, a SACCO, or even an insurance company, which is a third-party case. Now, in this case, the lender is not the owner of the business. So, now based on the criteria of time duration that this debt is repaid to the owner, liabilities can be classified into two main categories: non-current liabilities and current liabilities. Let's go to the case of non-current liabilities. What is this? Now, these are external debts that are repayable by the borrower for a longer period of time, which is more than 1 year. These debts are also referred to as long-term liabilities. Why? Because the repayment period is usually more than 1 year. It can be 2 years, can be 3 years, 5, 10 years, or even up to 20 years. It depends on the nature of a debt that one has already borrowed. A good example of such a non-current liabilities are bonds, debentures, commercial bank loans, and mortgages. The last category under liabilities is what we call current liabilities. Now, these are external debts that are repayable by the borrower for a shorter period of time, usually 1 year or less. These debts are also referred to as short-term liabilities. And good examples of these are trade creditors, which is also referred to as accounts payable, bank overdrafts, dividend payable, tax payable, accrued expenses, and income in advance, just to mention but a few. Now that you have learned about the balance sheet and also the components of balance sheet, the next question that will come to our mind is, how do we prepare a balance sheet? So welcome to session 2 of this accounting tutorial. Thank you. Now we have come to the end of this session, where we have learned about balance sheet and its definition and its components. The next question is, how do we prepare a balance sheet? So join me in the next session, that is the session 2 of this accounting tutorial, to learn how to prepare a balance sheet. Thank you. Remember, our materials and notes are available in our website accountingnest.com. Thank you.